let's get started. Good to have everybody here. Just a few announcements first. Um, we changed there is disclaimer. Okay, so risk disclaimer is substantial risk of loss in futures trading, and past performance is not indicative of future results. So that's one thing. Second thing is this video will be posted on YouTube for those of you who want to see it for the second time and review material. We actually post everything there, so if you forget and you want to take notes and review it again, you can do that. If you go to our community site, if you, Jake, maybe you want to post the link to the community site. We started cleaning it up a little bit. There were just way too many categories and everything else, so we're going to start making it a little bit more focused and better. And we're working also with the developer to give you guys badges. And what it means is that, those people that contribute more, we're going to count the number of words that you have, and we're going to give you a rank accordingly. Although Evan will always be the general, so you can't take it.
Well, I'll tell you, I think I can't keep up with Ben. I like listening to what Ben says.
Well, then I have a little bit of more good news on that. So, and that's the community site, and then I told you about the badges. Okay, the next thing is this. Okay, there's also a category there of trading journal. We have to clean it up a little bit and everything else. But what I'm going to try and do I don't know how long it will take, but I started a project because it's a software project of a trading journal. Okay, and if you have input, what you want to see in the trading journal, you can go to the trading journal category and put your input there as far as
God, I don't give a fuck. Just tell me how to trade and make money.
Probably should mute right there, Joshua.
Who's Ben? Jake, you can take care of it, right? You know where it came from? All right. So we're going to do a journal. There's always nice people in the world, how to make money. Buy lottery tickets, lots and lots of lottery tickets. Just sit outside the 7-Eleven your entire paycheck, right? Whoever said that. So, all right. So that's what we're going to do is a trading journal. And what you want to do is basically think about the parameters that you want in terms of performance and what you want to see from in the journal that would help you out in terms of your analysis. That would be really beneficial. Now, what I'm asking you to do is really give me your own input. I'm not asking you to go on Google, look at all the trading journals that are available and see essentially, what others offer, but rather think with yourself, what do you think you want to see in the trading journal? Jake, you want to put maybe that category of a trading journal that people can post? And so basically the reason that I'm doing this is because I want to bring practical stuff that would help you out in your analysis. So you can look objectively at what you do. Now, I'm not promising to implement every single feature out there because I have my own idea of what I think people should have in order to make it very, very practical. So, keep that in mind. Again, just think 15, 20 minutes, 30 minutes at some point and say, okay, you know what? This is the features that I would love to see. And if it clicks a light bulb in my head and I said, yes, that's the one, that's great. I'm going to try my best, again, to give this trading journal. To build it is not cheap because it's software. Software people charge a lot of money, but I'm going to try and cover the cost so I can give it free to the community. James is smiling because he knows about software a little bit, right? There you go. So that would help. Let's see if there's any more announcements. No. Okay. Today, actually, Evan, and you will be happy, the person who will be conducting the webinar is Ben. I'm going to give him the stage shortly, and he's going to teach you guys about order flow. Ben has been participating more and more in the forum. He's been talking more about the order flow, and he has good understanding of it and practical understanding. So I really wanted to give him that. I do not know order flow, not to the same degree that Ben knows it. I think he even took it a step further. And I think at this point, his understanding of order flow over our platform of Optimus Flow is good. And he liked it from day one, which really encouraged me, to do that. So I'm going to give him the mic soon so he can go over it. Now, one thing I want you to keep in mind, okay? So I still have to say the disclaimer before his presentation that there's a substantial risk of loss in futures trading. Past performance is not indicative of future result. Now, Ben, basically here as a guest presenter, okay? He is not a broker and he's not licensed, so you cannot ask him about how much does it cost or commissions or charges or anything related to that, but you can ask him definitely tons of technical questions about the platform and everything else that concerns that. What I wanted to do, basically, also the last link that I wanted to give you is, again, the link that we started with Ben, which is the order flow trading. Jake, you want to post that Ask Me Anything platform? Thread, where you can basically come and ask Ben any question you want about order flow. He posts his analysis of order flow over there, terms, explanation, not, just basically the basic theory behind order flow. So this is the one that you're seeing, and you can post your questions over there. Okay, so without further ado, now, Ben, take it from here. Ben, if I can just give you a little bit of guidance, because I don't think I had a lot of time to talk to you about this. What I'd like to see in this webinar, if it's okay with you, is basically go over the basics of order flow. Don't assume anybody knows anything about this business. It's a very different type of business, and it's microanalysis. So go over the general idea, what's behind it, terms, and then walk over the charts and see what can practically help them without, too much microanalysis, and how they can potentially also integrate it with their technical analysis. Just to give you an idea, Ben used to also work in a prop shop in Chicago, where he gained a lot of knowledge and access to people who were trading thousands of contracts full time. So he could potentially, help you here a lot. And I hope to do with Ben a lot more stuff in the future. So Ben, go ahead, and please no discussion of performance whatsoever, just plain theory. Okay, that's it. I'm going to mute myself and make Ben the master.
Thanks, Matt.
All right.
So yeah, thank you very much. Just a little bit about me and my history. I did trade in Chicago when I was really young. Actually, I moved out there when I was 20, and the type of trading that we did was all order flow. I knew nothing about the markets. I knew nothing about order flow. I went in and traded on a simulator and just started trading one lots. But the main trading that we did was strictly order flow. Like I said, I'm not a smart guy. I'm not some math whiz. And when I learned trading, it was really just staring at the dome and the ticket all day long. And the edge that we had back then was speed and execution, and really cheap commissions. So I remember when I was trading 1 or 2 lots, I would do 200-300 round turns a day. And the goal of that, some might consider that over trading, but the goal of that was to really get in and out of the market, to get a feel for it, and just be active in the markets. So as time progressed, increased size, and you get some more comfort with trading order flow and really just pattern recognition. So a quick note before I go into kind of the outline for today, which the outline actually is how do we implement order flow with our strategy, no matter what it is. to perfect our entries and our exits, and also validate our trading plan, and also be flexible with our trading plan and kind of see and be observant of what the market's telling you. But when I was trading maybe 6 months in, that's when market delta came to the market with the footprint chart. And it was the first of its kind, obviously, but it was just like the cluster chart. It was a color-coded chart to track active buying and active selling, so you could go and refer back to those charts and kind of see if you could match up what you were seeing on the ticket with what was actually really happening. So got a lot of experience there, and then reached out to Optimus and met Matt and got set up on this platform, and I've really liked it ever since. So today I do, like I said, I want to go over, and this comes from also a lot of the things that have been posted on the forum, with how do we tell how far a move can go, or if it's what direction it's going to go. So I do want to say that if there's any questions or anything that's not clear, anything that you want me to touch on, just post it in the chat, and I'll definitely address it. So let's share my screen. Oh, Jake, could I share my screen possibly?
Yeah, do you not have the option to on the bottom there?
Yeah, it says, well, I do, and then it says host disabled participant screen sharing.
Okay, one moment.
Okay, thanks. So while Jake's doing that, again, my four main topics today are: how do we implement order flow with our strategy to, 1, validate our trading plan for the day, 2, perfect our entries, 3, perfect our exits, and then also be flexible and trade with the market rather than against it. And when I talk about trading with the market, I think it's common for people to think, well, if it's an uptrend or a downtrend, but the style of trading that I do, and I have found myself just gravitating towards still, is short-term moves and taking advantage of any pricing inefficiency or any edge and any opportunity. So there's a couple trades that I'll show here in a second, but the best trades that I made today, I only held for a minute and a half or 2 minutes. And when I say best trades, they weren't really big winners, but they fell in line with my trading plan, and they fell in line with what the market was doing at that time, and what kind of everybody was doing. And it allowed me to get into the market with very little risk, and the trade went my way pretty much immediately. And that's, I think, the power of order flow, is that you're able to see these spots in the market where either a price is flipping a few times, or it feels like an overstretched rubber band that it's going to snap back. And Matt referenced this in a webinar a while ago, but the intuition, or traders being able to trade, but they can't, or it's really difficult for them to kind of verbalize why they did what they did, and teach it and explain that to other people, where it's really it just makes sense. So I'm trying to break that process down. So thank you. Okay.
It looks okay now. Thanks, Ben.
Perfect. So let's go right here. The first thing, so when we talk about how do we implement our strategy with order flow, and I do feel that it's extremely important that no matter what your strategy is, or no matter what your time frame is, we have to get our mind right, and we have to be mentally aware and present of not only what the market is telling us and what it's doing, but also how we're interpreting it and how we're talking to ourselves. during that time, and it's so important. It was so important to King Street that they actually hired a full-time psychiatrist, Brett Steenbarger, who's a phenomenal person and doctor. But we could go in and talk to him, and I vividly remember that the times that I went to meet with him and talk with him, it was very rarely, maybe 10, 20% was about trading. The majority of it was really just seeing a psychiatrist or seeing a therapist. It was talking about emotions and feelings and interpretations and perceptions. Because at the end of the day, the market is the same for everyone. Everybody has different tools, but it still is the same information. And the question is, how does everyone receive the same information but perceive it so differently that it results in winners and losers? And that's always intrigued me, the kind of the mental challenge and journey of trading. So my strategy always starts with getting your mind right, mental preparation, and being open to receiving what the market is telling you. Meta awareness is a big one, and that's the ability to observe your thoughts, feelings, sensations, and impulses as they are happening. The process of waking up to what's going on with us, with our thoughts, feelings, and impulses. So the reason I bring this up is because whenever we enter into a trade, whether it's on candlestick or order flow, we have a bias, we have a theory that we are, essentially betting that it's going to work out. So the biggest factors are bias, opinion, and then personal needs and desires, and that goes into why do we trade. And that's a whole nother topic, but ultimately that's why everybody is making a decision to trade and to enter the market when they do. So when we enter the market, we have an idea, and the biggest thing that I have found that affects everyone is our emotional response to the decision, to the immediate response from a trade, and ultimately the end result from a trade, whether it's a win or a loss, and how we perceive that and how it affects us and how it affects our decision making throughout the day. There's a lot of good posts that I'll quote here, but it's particularly in the forum, and somebody wrote, it's the aggregation of small wins, but having that win and having that confidence, and using that to further fuel good performance, but also being aware of that and not getting overconfident and over trading. So it's just this balancing act that plays out in so many different levels. And that's why I really preach and I practice, ideally, that even when we're in a trade and I'm in a trade, I'm always asking, how do I feel? What would I feel if I was, on the opposite side of this, or if I had bigger size or smaller size? Or what am I going to feel if I take money off the table and it moves another 10 points? Those are all very relevant things, very, very important things to be aware of, aside from winning or losing. So the plan every day that you make, preparation is just as important as execution. And when we go into planning for the day, like I said, I'm not a long-term trader. I'm very short-term. So I'll look at the daily trend and levels, but I do the majority of my charts on Jake. AJF entered the waiting room. Do I need to admit them?
I will handle
Oh,
that.
cool.
Don't worry
Sorry,
about
I
it.
didn't know.
All
Yeah.
good. You're gonna see that. So.
Cool. Okay. The majority of the levels and trends I draw are hourly, 15-minute, and 5-minute. And again, that's because I know for myself that I cannot hold trades for a long time, because I'm so used to being in and out of the market and taking 3-4 ticks. That's a phenomenal trade. If I can get 4 ticks, I'm thrilled. And there's some traders here that are probably like, my minimum is 4 points or 5 points, and that's awesome. And everybody has their own strategy and own way of trading. And my encouragement and my advice is to grasp onto that and really lean on that, and don't get caught up in what other people are doing or what they say is possible or not possible, or even how far the market moves and doesn't move. Because if it's in line with what works for you, then that's going to further propel you to make better decisions and better trades, and just keep that snowball effect going. I know for me, I don't like to risk a lot. I don't like to take a lot of heat, which is why I'm always typically 90% of the time I'm bidding and I'm offering and waiting for it to get filled. And with that said, I know that a byproduct of that is that I'm not always going to get filled, and I have to be okay with not getting filled, even if it's going to move 5 points in the direction that I would have been on. Because if I view it as, oh, I missed my price and I was right, and now I missed out on this, and I look at it as a negative, it's going to make me trade poorly, and it's going to just fuel negativity in my own head. So, back to the daily plan, I always keep that in mind. What's my trading strategy? What am I good at? What am I not good at? So I set my levels. I have a plan, and I say, okay, today, for instance, I wanted to buy dips. So when we opened and we were trading, market sold off, and I saw a few opportunities that I didn't take, which is okay. But right in this area, when you can see price, inching up and then coming down and inching up again, I even thought to myself, that's a good long. But I wasn't ready. I wasn't in the mindset to make that trade, and that's okay. So I let it go, and I just erased that from my memory and watched what the market was giving me. The few trades, let me go back to my notes here because I want to make sure. This is an important point. According to the National Science Foundation, an average person has about 12,000 to 60,000 thoughts per day. Of those, 80% are negative and 95% are repetitive thoughts. If we repeat those negative thoughts, we think negatively way more than we think positive thoughts. And the reason that I bring that up is because typically traders, they go into the market and they do what they do, and they'll have winning or losing days. But if they aren't aware of what they're saying to themselves and what they are, or how they're perceiving the results of their trades, it's going to fuel more negativity, and it's just going to be repetitive, and we're going to do the same thing over and over and over again. That's why one big helpful thing that I have found is recording my trading sessions and then replaying them at the end of the day when I'm not involved in the market and I'm not financially tied to the market and emotionally tied to the market, because I can look at it like I'm watching a movie, and I can even picture somebody else trading and objectively look and say, would I have made that trade knowing what I know now, but also not being emotionally involved in the market? And that's always helped me. So, if you're not doing that already, I'd highly recommend it. I think I have to record it because I make so many trades, whereas most traders are like, yeah, I take 1 or 2 trades a day, and then you can go back and look at it, and that's totally fine. But that's one thing that's helped me a lot, is to get away from that, repetitiveness of negative thoughts, negative emotions, and not being open to other information that we're many times, I think, blind to, not because we're not capable, it's just because we're not forcing ourselves to be aware of it. So I'm going to go into more depth there when I go over these trades. But does anybody have any questions so far, or any comments? Just put them in the chat and I'll address them. Let me go. Okay. Jake, where do I find? Oh, there we go. Chat. Never mind. So pricing inefficiencies, and the reason I bring this up is because Matt mentioned it, and he mentioned that trading is about taking opportunity of pricing inefficiencies. Pricing inefficiencies can happen on a macro level, on a micro level, and again, those have to fall within your trading strategy and your plan and your style. The pricing inefficiencies that typically work for me are, examples when someone pukes, or price goes down really fast or up really fast. I don't necessarily always jump on those, but I view those as opportunities to capitalize on the potential move after that. And I always view price action as this elastic rubber band that is always stretching and, coming back and then stretching, and then also sometimes breaking, and just really being observant of that. So the few trades, I said there was a couple trades that I made today that were right within my plan. And they were the best trades that I've made. Again, not because they were big winners. In fact, they were really small winners. But I know going back, I executed them perfectly, or, to the best of my ability. And I was observant during those trades. So back to my original trading plan for today, it was to buy dips and look for long opportunities. And I'm not getting that trading strategy from order flow. I'm just looking at charts. We're in an uptrend. There's resistance turning into support, and so on. So that was my main trading strategy. So today, get a drink of water. Today, right before the close, price came down. And just to clarify, this is a cluster chart. It is, I'll show you. It's a double, the type is double. Data type 1 is sell trades, type 2 is buy trades, and then I color by delta so I can visually see the imbalance between active buying and active selling. So price came down, tested the support area, some aggressive selling here, but not a lot, bounced off of it, price came back down and tested it. So I bought here. I was bidding at 10 quarter.
Ben,
right here.
Ben, if you don't mind.
Yeah.
Okay, listen, I think at this point, you really need to go into the small details and explaining to them what's the number on each side.
That's what I'm doing.
Okay.
Yep.
I just want to give them the fundamentals of what you're actually looking at before you made your decisions, and what the numbers mean on the bottom, and then explain the decision-making mechanism. Thank you.
Perfect. Thank you.
Okay, you got it.
So when we look at the dome here, we have the bids, we have the offers. When someone comes in to the market and makes an active buy or an active sell, that's where these numbers are recorded. And that's how I have it set up in the cluster chart. So for instance, at this point in time, there were 35 contracts that were aggressive sells that hit the bid. And at the same time, there were 0 contracts that lifted the offer. Now, when a new bar was formed, right here, open was right here, 74 contracts hit the bid, 55 contracts lifted the offer. So there were 74 contracts aggressively sold, 55 contracts aggressively bought. And I look at these to find the imbalance. So when we have a bar here that is overall red, that means that there's more active sellers hitting the bid than there are active buyers lifting the offer. And this is a 2000 tick chart. So that means that there has to be 2000 trades that happen before a new bar is formed. And in that, we can aggregate this data with the time statistics tab right here. So I have volume, which is just the total number of contracts traded within those 200 trades. Buy volume was 1,364, meaning 1,364 contracts were purchased actively that lifted the offer, and 2,479 contracts hit the bid, meaning aggressive sellers hitting the bid. The difference between the two was negative 1,115. So that's how many more contracts were sold at the market than bought at the market. So the imbalance was that the sellers were more aggressive than the buyers. Now, this is not, I'll point this out here in a second because there's never an exact formula. These are just tools that I use to kind of help me validate my hypothesis and develop my trades. So what I'm seeing here is that price is coming down with more active sellers than buyers. On this bar, price went up, and then we can do the same thing. The delta was 621, which means there was 621 more contracts bought or lifting the offer than they were sold. So there's more buyers. Price went up. Next bar was a positive 343. This bar, we came down and price came down to test this area, and the delta was negative 751. So the reason that Matt, does that help explain it a little bit more in detail?
It does. It does.
Okay.
I just think you have to focus a little bit on explaining the delta. You know that it's the difference between the buyers and sellers, right?
Mm-hmm. Yeah.
Right. So that's. But yeah, it's going well. Thanks, man.
Okay. So when we take the different, look at this bar and then this bar. This has a negative 1,000. This has negative 751. So what that's telling me is that there were less active sellers hitting the bid than there were on this bar. And again, there's no exact formula. There never is. And I never will say that I know this because of this. Again, it's just validating my hypothesis. So what I'm seeing is that there's less active sellers in the market, and price did not come down as aggressively as it did in this area. So I'm seeing that, okay, there's less sellers, there's less active sellers in the market, and price isn't coming down. My plan was to buy dips. So I'm going to, place a bid and take a long position. So what I want to see at this point is now obviously more active buyers than sellers. And we did. Now on this bar, there was a positive 44, meaning that there was 44 more contracts lifting the offer than there were hitting the bid. That's great. But as we come and we keep playing this out, price is telling us that it's not making higher highs, it's making higher lows or lower highs. And there's still selling interest in these lower prices. And what I say by selling interest is that when price comes down here, there's a lot of people hitting the bid, hitting the bid, hitting the bid. And there's not as much buying interest. So the delta, even though it's positive, it's negative, and it's kind of just even overall, I'm not seeing price come up. And
Um,
go ahead.
Yes, sorry. My name is Valery Salov.
Hi.
I am new to your members, maybe. I try to understand better this diagram. So is it like immediate snapshot of book of the limit orders, what is shown on each vertical line? Or is it like within 5 or whatever 1 minute interval, how many contracts there were there, they summarized? Like I try to understand. So is it, if it's like a limit order book, I see for each price, the buy side current orders, the sell side, then I understand that it may be a difference. Is it my understanding correct?
Yeah, good question. Thank you. And that helps me kind of think about how I can formulate this better. So as we see here, this is the dome. There's one contract on the bid, 5 contracts on the offer. The numbers on this particular cluster chart will not print until a contract is sold into this bid. So if there's one contract sold at 10 quarter, it will print 1 in this column right here. Yep. So it's easier to see on the dome surface, but this is, I have these set up for tick intervals. So it's not time based, like you said, is it 1 minute or 2 minute? These bars can take 10 minutes to form, or they can take 30 seconds to form. They only create new bars when there's a total of 2,000 or 5,000 trades.
Okay, I got it.
Yeah.
Yes.
Yeah.
I got it. Yeah,
Thank you. Good question. Yeah.
Thank you very much.
And you can do this, cluster chart on a time interval, 1 minute or 5 minute. The reason that I do tick charts is to
you need certain volume. You need to accumulate certain volume. I understand. Thank you.
Perfect. Yeah. So, and you can actually, I mean, there's different ways that you can manipulate this data to show limit orders. But I like to see market orders and aggressive buying and selling. That's why I have it this way, because I want to see the imbalance of aggressive buyers right here versus aggressive sellers. Does that make sense?
Yes, it makes sense to me. Yes.
Perfect. So as this trade's playing out, I think this is the bottom. The trade goes for me immediately. And that's a great feeling. But as it goes on, I'm not seeing, first of all, I'm not seeing price break this trend line. And I'm also not seeing the buyers able to push price up. And that's concerning to me because I'm long and I'm seeing that these sellers are overpowering the buyers because they keep selling into these prices, driving it lower and lower. Now, throughout this, I thought this was definitely the bottom, so on and so forth, but the order flow showed me otherwise, and I was able to be flexible and I got out, but I only got out because these buyers up here, this was 45 contracts lifting the offer at 13.5, 33 contracts lifting the offer at 12 quarter. That tells me that there's not a lot of buyers interested in these higher prices. So we saw this base being formed with these aggressive sellers and these really heavy red bars at the bottom. And the blue bars were just kind of declining. And then price fell, which means all these buyers, well, let me go back. The people who sold, or the contracts that were sold at the market at this level, they held their position and they were confident that price was going to keep going down. So they never turned into like a big buying group that was able to push price higher. And the buyers were getting squeezed. So if let's take a real life example. So if I was one trader and I bought 45 contracts here at the market. So I open an order, or I lift the offer with 45 contracts at 13.5, and then price immediately goes against me, then I'm going to get caught. I'm going to get like, oh, I just bought 45 contracts. Now price is going against me. I'm going to have to sell these at some point. And that's when I would hit the bid, turn around, and it would print here on this side. So are there any questions after that with the more detailed numbers here?
Ben, I have
Yep.
a question.
Yeah.
Have you seen situations where the market goes rapidly up on very, very low volume or drops on very low volume? Can you talk about the scenario of those situations where you see, basically not a lot of volume traded, but lots of direction? Do you see that sometimes?
Yeah, absolutely. I see it a lot right before numbers. We'll see that the book gets very thin, meaning that there's not a lot of size on the bids. There's not a lot of size on the offers. And that's because people are exiting. They're pulling their bids and offers because they don't know what the number is going to be, and so on. So when that happens, well, again, back to this example, I just said if I were to buy 45 contracts at 13.5, that was one price. I could get all the contracts off at one price. If I were to try to buy 45 right now, and I would just put it in at 10 3/4, I would only get 5 contracts, and then the new bid would be 40 contracts at 10 3/4. But if I'm doing a market order for 45 and I put it in way up here, it's going to take 5 and 5 and 10 and 5 and so on until I get filled 45 contracts. So that means that when the book is really thick, I can buy 45 contracts at one price. But if I were to just dump 45 contracts up here on really low, like a low liquid book, then it would move price 2 points. Does that make sense, Matt? So price, again, that happens when numbers come out, when the book's not thick, and price will move way more drastically on that volume, compared to really liquid times. Go back here.
Hey, Ben, and there was a couple questions in chat, I believe, for you.
Perfect.
If I know it's a little weird when you're sharing your screen, but
No, I gotta perfect. Thank you. Oh yeah, I see him. Nice. All right. So, good question. So yes, I definitely. Someone asked, in terms of mental preparation, do you do anything like meditation or journaling? And I do both, actually. I love meditation. I do it a lot. And I find that even when I'm not seeing the market, or when I have trouble kind of just getting on the right side of the market, I like to step away and just not think about anything. I don't ask why. I don't ask, who's in the market or who's not. It's really just self-awareness and meta awareness. So yeah, love meditating, love journaling. Software that I use is OBS. It's free, and it's open source. I like free, so I think Zoom might have it too. Next question. Oh, so I like ES over NQ or YM. That's a great question. I started out trading the NASDAQ, but this was back in the early 2000s, when the S&P was, they had 2,000 or 3,000 contracts on the bid and the offer. And now today we're seeing, a few hundred. So I like that rapid movement. I don't like the rapid movement of the Dow or the Russell. That's a little too fast for me. So I liked NASDAQ before, but now I like the S&P because it kind of trades like the NASDAQ did 20 years ago. But that goes back to, does it fit with your style? Does it fit with your risk parameters? And does it make sense to you? So I would trade any market depending on if it fits with my style. Backtesting before trading a strategy helps with mental preparation because it isn't as needed if I know the strategy has won historically. easier to pull the trigger if I know it has worked in the past. Absolutely. Um, and that's why I think that just getting in the market and being active, and especially with order flow, is a real good tool. Even on demo, just open a trade and manage it, and manage your emotions, manage your feelings, and what the market is telling you. But I love doing that in my own time, just demo trading. There was some absorption at 1025, and I think this was back to this right here. So yes, good point. When I'm seeing this, and this is actually, another reason why I initiate trades, is when I see an edge, when I see people absorbing market orders. And what I mean by absorption is, at this price, there was 139 contracts sold at the bid. This does not show how many contracts were available to be bought on the bid, but I just look at that in real time. But as we see those contracts being sold and sold and sold, and then the bid starts decreasing, many people will reload on the bid or join the bid, and that's what is referred to as absorbing. So the buyers are absorbing all the sell orders, and then these sellers are not able to move price down because there's too many people willing to buy at 10 quarter. And it's really easy to see on big volume when you see like 1,000 that were bought at a certain price and it didn't move any more than that. Here's a good example. So during the day, this might be 200 contracts during normal volume hours. So if a lot of people were to come to market and buy 11 quarter, we would start seeing the offer decrease in size. But people will either do iceberg orders, which is just reloading the bid and just trying to get as much size off there as possible. And that's where we'll see price stop, and it just absorbs everything, and then they can't push it up higher, and then it'll start to come down if it's an absorption reversal. Didn't you close too late? Let's take a look at that. So could you maybe elaborate on that? Close too late. Did you mean close from the buy to the sell?
Yes, that's correct.
Okay. So this is where I think internal dialogue comes in, and the meta awareness of being in a trade. So it's really easy to get caught up in the trade goes for me immediately. It's in the money, and this is awesome. My strategy was to buy dips, and I was expecting a big move up. So I was willing to hold this trade a little bit more, which is why you see, okay, it got in here, I got in here, it went up. I mean, that would have been a 3-point trade. That's huge for me. But I thought it was going to go higher than that. And it started coming back down, and I started to see this wedge, and I was like, okay, I have to take money off the table because I don't think that the market is validating my idea anymore. And that's been a discussion in the forum, is when do we know to take off, size, or when do we know to get out of a trade? And I'll be the first one to say, I don't know. I don't know for sure that this is going to go this way, or that these, decrease in delta and decrease in volume is going to result in this. I honestly thought it was going to go 5 points minimum from this area. So you could technically say I was wrong, even though I made money. So I would say I held the trade based on what my initial thought was, but I also was open to the market telling me otherwise. Does that make sense? back testing. I'm going to get back to these. Do you consider the
Yes, thank you so much.
Yeah, absolutely. And it's a tough one because I want a 5-point trade. But I guess I don't really have an honest answer in terms of this is the exact formula of when to take trades off and when to not take trades off, because the market is changing all the time. Do you consider the limit order perspective as well, or do you mainly just care about market order buyer versus market order sellers? I do actually, and that's a very good point, because when it comes to people masking their size, which means there might be somebody here at this level that has to buy 5,000 contracts, and you're not going to see that in the order book. They're just not going to have 5,000 up there. They're going to iceberg it, or they're going to get it off over time with buy limits or market buys. So I was actually talking to Jake about liquidity and figuring out how to visualize that a little better. Right now, for my type of trading, I only really focus on the market orders. But for a longer term trader, I think that knowing where the liquidity is and knowing where the size is from a passive point of view is very important. And I think that I'll probably start a discussion on that to come up with some charts to do that and to visualize that a little better. I'm going to write that down. Can you share the link for the Google Doc on order flow? And I think you might be referring to the forum, which is posted up above. But if you're referring to something else, you can put it in the chat and I'll address that. Do you ever trade the overnight markets or stick to the day session? Overnight markets are a little slow for me, but I do see the benefit in trading them, and I have traded them sometimes. But typically, I'd stick to the day and where there's more liquidity and more volume. So that's it for the questions. Does anybody else have any other questions? Or Matt, can I elaborate on anything further?
Ben,
Yeah.
I was going to say, the Google Doc that you're showing out, I think that was the question he asked about, what you have on Google Chrome right now.
Oh, yeah, absolutely. I can post that for sure. And actually, I will format this into a post, and I'll share that as well. But I was going to post that on the forum. Thank you.
Ben, I think you did really well. And just to elaborate, I like to put things in simple terms, as far as entries and exits. You exit when the market conditions have changed. Whether, what made you get in from the first place is not there anymore. So Ben's idea was like, look, I thought I'm going to get X number of points, but I don't have a crystal ball, and I have to basically act and react based on the information that the market gave me, right? So up until that point that the market was going up, it was going in line with everything he thought, but then he saw a change in market conditions, and then, he says, I have to exit. Unfortunately, majority of the beginner traders, they said, I think I see 5 points, and they never changed their point along the way, even though the market conditions change, and then they rely on hope and emotions and everything else. So it's a good point that Ben made, that he saw change of market conditions and he was able to get out with a profit. So the way to look at it is not to look at, hey, he didn't max out his profits because, at the top, but he just reacted to an immediate market change, an immediate market change in market delta. So the market delta, at that point, there were more sellers than buyers. He says, okay, you know what? Something is wrong with the theory. That what not with the theory, but what made me get in, it's not there anymore. So I need to get out. So he has his reference. The chart below, if you look at the left side, you would see there's a volume that's traded, buy volume, the sell volume, and then the delta, which separates the buyers from the sellers. And then there's a delta percent change, which I assume is from the last bar, correct, Ben?
I believe this is the buy volume divided by the sell volume. It's basically just the numerical value in percentage terms.
I see. I see.
Yeah.
Okay. So what is it again? Can you repeat that?
Buy volume divided by sell volume, or vice
By
versa.
volume.
Yeah.
I see. I
Yeah.
see. Okay. So it gives you a percentage if there's. I see. Okay. So there
Yes.
were. So let's look at that bar that you're pointing at. There were So the buy volume was. Let's see. What was this? Okay. So it's 1219 was the number of the buy volume. Number of people who wanted to sell was 1970. So how's the 23 gets calculated? It's a percent, right? Oh, the
Yeah.
750. Okay, so the 751 is a percent of what? Which part?
That's the difference between the buy and sell.
Yeah. And then
Yeah, no, I'm talking about the market delta percent, right? How is that calculated?
actually,
How is 23% negative? So you had more, let me see, you had more sellers than buyers. So
yeah, I'd have to
or
do
is it
the,
from the or is it from the total volume? It seems to me that it's no, but then it would be 25%.
Hey, Matt, it's Jim.
Hey, Jim.
It's the 23% is just the negative 751 divided by the 3189 total trades.
that's
There you
right.
go.
It's just
There
a
you go.
percentage.
There you go.
Thank you.
Jim.
That's what I'm here for.
without you? What would we do without you? And we can't even thank you. I mean, we can't even see you and thank you. So, but thank you. Okay, now we can see you and thank you. All right.
Matt, the one thing I want to say, and this is for everyone, is that I'm wrong a lot. I'm more wrong than I am right. And that's why I trade a lot, because I don't know where the market's going to go. I don't know. My belief is that it can change in a millisecond. And if I see it, or if I feel like I see it, I need to be held accountable to myself and doing what I believe to be right. And, obviously I hope it is, but I honestly thought that this was going to be a great spot to buy, and it was just going to go straight to the top. So not only did I get out, I saw something else and I sold, and I never sell lows. I think this was a market sell. I never sell lows. I never take this much heat. I mean, I shouldn't say never, but this is a lot of heat for me. Like, that's the heat that I like, is one tick. But I saw something different, and I sat back and I said, this is what it's telling me. I'm fearful that this is a wedge and it's going to go up and break through it. But just really being observant to the market and what it's telling you. And it's okay to be wrong. It's okay to get in and out, and to even sit out. But yeah.
Okay.
Can I ask maybe a very a clarifying question, because this is the first time I've seen this, and obviously there's a lot on the that have seen this before. But okay, where you say, Ben, where you bought, okay, just that line with all the numbers on both sides, the buying and selling. Okay, red means sell for me. That means it's going short. All right, so then the tick to the right of that is green, so that means it's moved in the opposite direction. Okay, so as it moves in the opposite direction, okay, my familiarity with each of those contracts, okay, I can get used to that. But so it goes up and it stops at 37.71, basically. That's what I can see, where the green line stops. Okay, there's no color above the 31.71, but I do see color to the right of it at 221 to 212, but then I start seeing the decline. Okay, and I understand what you're saying. It's the sellers out there driving that down. Okay, so when you entered that contract at 139 and 32, okay, so you go to the right of that, and that becomes your climb then, correct? All right, so it's going up. So every time to the right of that, where I see a bar less than your top end, you're losing money. Is that correct? So as it goes down, when you sold, you were still above your entry point, but you know, as you saw that go down, that at that point you're making the decision: do I stay in or do I not? You know, because I see where you sold on the top, but then you see you sold on the bottom too. So,
Right.
is that a way of looking at this, or am I just off?
No, no, you're right. So each row is a tick. So this is what, 10 quarter, this is 10 half. And the first thing I'll bring up is that you said that there's not a lot of color up here, right? That is because there's not a significant enough imbalance between buyers and sellers to have the color be really blue, which means there's more buyers lifting the offer than there are sellers hitting the bid. And in these bars, it's more red because there's more sellers hitting the bid than buyers lifting the offer. So price went up. I entered here at 10 quarter and it went up a lot. And this is each tick. So yeah, I essentially could have gotten out at, let's say 13 quarter, and that would have been a 3-point move. So every time this comes down, that's one tick that you're either losing or making money. Does that make sense or help?
Yeah,
Okay.
it makes sense, because the thing is, when it loses color, that's just when it just goes flat, basically, right? I mean, it's flat, trying to decide what it's going to do next.
Yeah.
You know, just looking at the movement of the real data, you know, it's just going flat for a minute, and then so it's, yeah, you know, because I mean, for me, if I'm going long, I don't want to hang out too long going short. So
Right. Yeah, and I think that I'm going to kind of maybe do some more videos of this. This is hard to see in retrospect because you don't see the movement as it's happening in the market. So I'll create some content based on this footprint chart. And I apologize because I mean, I've been looking at this since 2003. So it makes sense to me. And it's sometimes hard to kind of explain it in layman terms to make sure that it's really resonating. So, and also Matt, we do need to talk about having more of a, you know, personal, like maybe live trading session or demo trading where there's a live Q&A, because it's easier to see this in real time. And I think that once you do see it in real time and you see a 5 lot lifting the offer, you'll see right here a 5 lot printing showing that it lifted the offer. Does that? Yeah.
I would love to do it for you. I would love to do a live session,
Cool.
you know?
Yeah.
It's very hard. I'm just we have to just figure out a time that people are available, you know, that they can do it maybe sometime, you know, 11 in the morning or something like that. So it's still early enough on the West Coast, and here it's on the East Coast, but
Yeah.
it's hard to figure out. We just choose times based on, you know, just make it a little bit easy for the West Coast to come in, and during lunchtime, and East Coast it's still 4 o'clock, and
Yep.
you know, so, but we'll do it. You know, it's an actually excellent idea, and I'm very proud of you. You did really well.
Thank you,
So
Matt.
thank you. I appreciate it.
And I'll get back to these questions too. The chat ones, I'll create some posts for everyone.
Yeah, definitely. Jake could give you all the questions. Is there anything else you wanted to mention? Because it's an hour over. If you want to answer some more questions, or you want to mention anything else.
No, I think that's it for now. But it's given me some good ideas of what to elaborate on going forward. So thank you for all the questions and your time.
Thank you. Okay, guys. So again, you know, you have the thread there. We gave it to you. It's called what is it called? Market profile, volume analysis, and volume profile AMA. So you can basically, you know, check with. You can actually ask Ben all the questions over there. Those of you who ask questions, I will give you Optimus Flow with full features for 3 months, you know, just to, you know, the questions that you ask. And the other thing that I wanted to tell you, you know, we've seen more and more posts on the forum. And what I like about that is that we're really talking about real market scenarios and real market dilemmas and questions. And everything else. So we're really building a community of traders, not, you know, a community of hypothetical things, you know, that could happen, but real life, you know, situations that you face in the market. Because there is a lot of difference between theoretical knowledge of markets and actual trading, right? If you notice, you know, the terms that Ben uses, you know, he doesn't use the terms, you know, I buyers bought here, you know, sold here. It just, you know, it's like lifting the offer, right? Things of that nature, which is, it's just so engraved in your nature to speak of a certain way once you're been in a shop that everybody just sits there just to make money for the owner, right? This is where Ben is coming from. It's a business. They give you money and they say, make me money. And I don't care what you do, you make me money. If you don't make me money, you're out the door. Now, they understand the process that people need to learn, that people need to do things and everything else. But that's basically, you know, what it is. Essentially, I look, you know, look forward to new presentations from Ben, obviously, and yes, doing a live session would be really good. Jake, you want to post before we say goodbye to everyone? You want to post the AMA one more time for Ben?
Yep, I'm gonna post it in a sec.
Yeah. Post it in a second. That's it. And as I mentioned, you know, as I do more of the trading journal, as I start developing it, and we have some concepts in place. I'm going to update the community through the forum as well. That's basically it. Ben, thank you so much. I can't thank you enough for giving a wonderful presentation, not only covering, you know, market profile, but, you know, talking about the frame of mind, of how you approach things, and, you know, the candid honesty that, you know, that honestly, when you trade, you don't have all the answers or a crystal ball, or you can't guess every single thing out there. So thank you again, Ben. Thank you, Jake, for always helping me manage those webinars. Guys, thank you so much for showing up. I wish you well, you know, and a great weekend. And I look forward to, you know, hearing from you and participating with you on the forum. All right. So
Thanks,
all the
guys.
best and have a good weekend. Take care. Bye-bye.
See ya.
Thank you all.
Thank you. Bye-bye.